We got the higher number from Paramount. It's $31, so they upped it from $30 per share for the entire company. Now, what that has forced the Warner Brothers Discovery Board to do is to go back to the drawing board, kind of re-engage with Paramount, see exactly what number they can come up with. But ultimately, they have to deem whether this is a superior proposal or not. So far, they have two offers on the table, this one from Paramount and the $27.75 per share from Netflix, but that is only for part of the business. That's only for the studio and the streaming assets. So they're still in the process of making a determination about which offer is superior. But the minute that that they make that determination and they call the Paramount offer superior, then the clock starts ticking for Netflix. They have 4 days to come up with their own enhanced offer, so to match the Paramount offer. And then, we'll kind of see where the chips fall after that.
Yeah, well, Geetha, I recall the Warner Brothers board really did not like some of the financing terms for the Paramount bid initially, right? So does this new improved offer improve upon some of those sticking points in the earlier deal? And does that really de-risk the transaction now that they've come up with another offer here?
They have all of the points that Warner Brothers had initially raised. They have the Paramount management team has proposed remedies. So one of the big things that they have kind of come up with is that they're going to cover the financing costs and the termination fee if Netflix exits this process. They actually upped their own termination fee from $5.9 billion to $7 billion. They are going to pay something called a ticking fee, which is 25 cents per share per quarter for every quarter that the transaction does not close beyond September. So they've offered a lot of different things, including kind of backstopping the whole equity portion of the deal, as well as providing guarantees for the debt financing. So a lot of the points that Warner Brothers had initially raised, you're absolutely right, Christine. Paramount has kind of come out and addressed that. So definitely providing a lot more comfort to the Warner Brothers Discovery Board.
Yeah, Geetha, you're right. It seems like Paramount's really stepped up and really said we're going to be really credible here. Meanwhile, Netflix has been quietly waiting on the sidelines, not really doing anything. But it now seems like now's the time for them to, really make a decision, step up with a bigger, better offer, different offer. I'm not sure. What do you think the options are for Netflix?
The best option, in my view, Paul, for Netflix, and I think majority of its investors would also agree, is to just walk away, pocket the $2.8 billion that you get in termination fees, just walk away and just focus on your core business, because they do have a very strong core business. As we've said many times, Paul, and you agree that this, Warner Brothers is a great asset. There's absolutely no doubt about it, but it is really just a nice to have, not a must have for Netflix. So it could end up actually becoming a distraction. So, in many cases, I mean, I think the way that, the street almost perceives that is that Netflix is a winner if they lose this whole bidding process. But that said, I mean, they do have a lot of financial firepower. If they did have to increase their bid, up it by about $2, they absolutely can do that. The only thing is, once they go beyond that, then they kind of risk overpaying for the asset. They risk their leverage profile really kind of getting a little bit dangerous, I would say. I mean, gross debt is going to be well above $100 billion. Leverage could be at 4 times. They're at 0.6 times right now. So, all of those things start kind of coming into question. But of course, they have a great free cash flow profile, so deleveraging wouldn't be an issue. That said, there still are, integration and execution risks always with any M&A deal.
Yeah, well, so if Paramount does indeed win the deal, does that present stronger competition for Netflix, at least in the streaming space?
I mean, it definitely will to some extent, but I think what Netflix and everybody else is banking on is that leverage is just going to be so high for the combined Paramount, Warner Brothers, Discovery that, at least for the first couple of years, I think they're just going to be really focused on kind of driving costs down, hitting their synergy targets, not really being able to invest in the business. But again, it's it all comes down to exactly what the number is going to be. But you're right, they definitely will be a stronger competitor. Although I don't think it's going to be a make or break for Netflix at all.